Hey everybody, Carlos here from Forex FX. Welcome to another forecast video, and today is June 21st, 2015. Let's get right into the forecast review. We were looking for a buy setup on the Australian dollar, sell setup on the Japanese yen, standing outside on the remaining of the pair. Let's see what the market did. Starting with the dollar Japanese yen, here's the synergy zone as expected. A pullback between 23.16 and 23.51 held perfectly as a couple bottom top formation pivot step. The breakout of the pivot step in place. You can let me zoom in so you can clearly see it. There you go. It would be this guy right there. It was backed up by the cross of the moving average right at the moment. There you go. This is a 30-minute. We missed the first target, but the drop was perfectly executed with over 45 pip of total potential move, whereas probably you take anywhere from 40 to 50 of those. So we're talking about anywhere from 20 to 30 clean pips in your favor. The market is still continuing on a downward move here, but obviously I cleared out before the close of the day by trailing my stop accordingly. Alright, so that was a great setup right there. As expected, this is the power of the synergy zone, which is, by the way, an announcement that I'm going to provide for you today, is that we are reopening again the probabilities of providing you the strongest training on how to forecast market movement with high accuracy. And what I mean by probabilities is because that depends if you seize the opportunity or not of also reopening this opportunity from one more time. So there you go, based on a lot of petitions and requests, and it's going to be awesome, guys. So what I'm going to share with you a couple of things that you're going to learn eventually, and I'm going to go ahead and this week probably produce a couple of the forecast samples live as we execute and go on, so you can see the validity of it as it happens and provide you with a cleaned, clear, intelligent decision that this is one of the most powerful trainings out there. All right, guys, so hope you see it. All right, back to the forecast. So we are going to continue on this journey into a sell setup on the dollar yen. Once again, that was a pivot step on the area. We go to the 4-hour chart, and the only problem is that the market is extremely oversold. Okay, so price action activity has provided us with one great setup, but here's the thing. Notice how the market did not took the prior low a couple times right there. Understood? So this for me is probably indication that the price action movement or speculators are not following through with the downtrend of this intended move. Although the zone held perfectly, we forecasted as perfectly as we could with our analysis and knowledge of price action reversal zone, which is the synergy zone. Then the market just did not continue. So should we continue on a path of a potentially continue on a downward movement? Well, I'm going to pass. The target has not been reached yet. So I'm going to go ahead and follow through with a pivot step and watch them closely. If I see the breakthrough to the downside, taking the prior lows, I'm going to go ahead and go for a sell setup or short position, targeting 122.26, 21.90, and 21.54, as these guys are not being changed because they have never been reached. Now, bear in mind, the market did not actually took the prior lows here or this low here, making higher lows, which is a price action pattern of a potential reversal as well. So basically what I'm saying is I'm sticking with a sell setup as long as I have a clean cut through to the downside and they take these two important lows. Then I'm gonna go ahead and take one short position targeting at least the first target in this area and continue on, making maybe 10-15 pips if I see the opportunity. Why am I staying in position of a short signal? Because the zone held perfectly. It's not until they break beyond the 23.51 that I can change my perspective. One thing. Number two, price action definitely based on what the market have done in this area. They rally heavily, but they just went short immediately. It's bigger intensive impulse move towards the downside than this small tendency of not continuing down, meaning this is more an aggressive move with intention than this guys that they just slowly but steady being rejecting the low, whereas I probably can see they're they're just testing those support levels and eventually going to break. Once again, nothing is 100% sure, but I'm just following my gut feeling in terms of price action. As long as the zone is held intact, I'm still okay of taking another position, and the target has not been reached, meaning the high probability of one of these being reached are high as well. So even though the market is extremely oversold, I'm probably gonna give it a try, as long as, and I repeat myself, the moving average stays separated on the 1 hour chart. I see a clean cut through at least on this low. I'm gonna target the first guy right here. All right, continue on the next setup that we had was the Australian dollar, and this was the Australian dollar. If you notice, I held here a buy position right at the end of the day when I saw the market rallying on an upward movement, and I left an open order intact that has been filled a couple hours ago, and basically I got my stop loss level right now so far up until now, until this level. And if you notice, I'm on a 1 hour chart. Let me zoom in. You notice how the market made a new high. Now this is the same position that I held as an open floating order since Friday. So it's just barely, I noticed that I recently got filled when I log into my account. So I'm long this position literally right now as we speak. I'm on a 1 hour chart. So basically my stop loss was placed beyond the level of the pivot low. But if you notice, this high took all these important highs right here, and they left behind this small pivot. I'm going to make the adjustment of raising my stop right at that level, and I'm not going to risk that much. If I do get stopped out, so be it. But the price section is giving me the opportunity that raising my stop from 50 to just about 21 pips. And I'm still going to try to aim for the first target over there. So based on risk reward ratio, I'm talking about from 25 ticks to a potential of about 79. I'm going to trail this in the possibly US session to see how that goes. Once again, I should leave my stop in this area, but basically since they took all these important highs right there, I'm taking the advantage of the new cross of the moving average on the 1 hour chart, as you can see right here, and the pivot low, and placing my stop on that level because price action is telling me this is what I should raise my stop accordingly. So immediately I cut off my risk from 50 to 20 something on my exposure, and as long as the market continue on and take this prior high right there, I will start increasing my stop accordingly and protecting my capital. All right, that's awesome. Hopefully that's pretty awesome that you can actually see this. And once again, a couple of hours ago, I just as the market got open, I had that floating order that has been triggered. So that's so far bullish. Same analysis, same target projections in this area. I'm going to recalculate new targets possibly right now. All right, after analyzing the market, I noticed that a potential next step up would be 78.26, 78.51, and 78.78. There's our closer target pricing based on floating orders, smart money levels. So I'm going to, concentrate about this, and I'm going to just put my next level of a limit right at the first target over the new calculations that I did. All right, so this is on the fly, guys, making this as we go. So either I'm going to risk about 25 pip for a potential gain of about possibly 43, and if I see the market moving quite honestly in my favor without any hesitation, I'm probably going to take my risk and move it on the upper level as we see. All right, so moving along, British pound, we were looking for we were not looking for any position. We were standing aside. Price action activity, you can clearly see with your eyes right there that the market is just sideways. So there's no impending move right now, either up or down, although the market is being extremely overbought, getting ready for a short position. Now I'm waiting for price action to validate that potential outcome towards the new downtrend movement. In the meantime, I'm going to sit aside. I'm just going to watch it here with the pivot step and to validate this break, and I'll follow along on that path. Euro dollar price action very weird as well. 4-hour chart. Take a look how weak the market is looking in terms of momentum. Extremely overbought conditions. The market should continue on the downward side, not on the bullish side. So basically the market is just plain and simple, plain dumb in terms of going up, coming down, then, you know, very unstable. We're going to sit aside on this one for now. Euro yen, same thing as the euro dollar. I'm not even going to explain the path here. I'm going to be standing outside. And finally, pound yen. On the pound yen, I had this as gauge of the potential power of the synergy zone from Thursday. Now let me show you what I mean by that. If you take a closer look here, I'm going to zoom in. Guys, this is Thursday synergy zone. Take a look how powerful these levels were sustained, all right, even on Friday. What can you do when you have this type of information in your arsenal? Understanding that the importance of seeing the 95.50 specifically by the tick dictate the complete reversal of a potential downward move on the pound yen, assuming that you're a short-term trader, will help you identify any potential sell setup or micro trade setups like 5 minutes and whatnot. And also understand that the market is hovering in a highly probable reversal point. It didn't happen immediately when the market went down, came back up. As you can see, what was supposed to be a potential buy setup. Remember, I had this. Let me just zoom out because this is very important for you to see. If you understand, if you've been trading for quite a while, you understand that support turns into resistance. This is the synergy zone. All right, right here. We were looking for a buy setup. The market just violated it and came below it. Now remember, synergy zone is a powerful zone where smart money are looking to become either strong buyers or strong sellers. If the zone is violated, it's imperative that the most likely potential of reversal is here. Now, this will clear up what I'm just saying and clarify how powerful this is by understanding when support turns into resistance. In this case, is the zone. You can see how the market went through it and came back into the zone, and take a look how the 95.50, which was supposed to be support, has turned into an impressive resistance point area. And turning the zone, take a look how the market went back and forth into the zone that we were able to predict, understanding that this is more likely a very unstable area until they broke to the downside. They made new lows, came back into the zone, and the zone again rejected it towards the downside. So what can you do in terms of this information? That's up to you when you apply it, once you learn how to definitely identify this zone. Now, this was a very difficult one, and I explained that. Check the video below, or, well, I think it's still explained there, so you can see how powerful that is. I'm going to leave it as it is to either one or two things. If they break above and beyond 95.50, you will see the market eventually going where we want it to. But if they don't, obviously you will see how this zone will translate to become a very powerful still reversal area. So I'm going to extend it over here. And most likely the tendency would be for the market to continue on a downside move as expected. Why? Because they broke below the 94.99, which was the low of the zone when we were expecting it to bounce from it. Once again, support has translated itself into resistance. I'm going to put a pivot step in place here to validate anywhere the price section. And if I go into the 4-hour chart, I need to understand that this might be a potential reversal point. And lo and behold, the cross above the 80 level is sustaining, and the width apart that the market indeed most likely will be continuing a downward move. I'm going to wait until price action validate this. I just wanted to show you how understanding and calculating and coming up with the zone will help you identify and understand and being able to read the market with accuracy of rejecting the zones and coming up with a potential setup of a new trend continuation, possibly to the downside. So if you can start foreseeing this before it happens and then act when your actual trigger scenario comes by, it will give you the competitive advantage on your favor against the other traders. They don't, because remember, for every winner there's a loser. And so far I see that most likely people will, those people who think that the pound yen might continue on an upward movement are potentially still either holding their positions, while here we're standing aside waiting for confirmation, because most likely we're being waiting right now for a potential reversal zone, and most likely understanding that they're going towards the downside. All right, so I'm going to wait for that to happen, and we'll follow through with it to see if the validations of it are high or not. All right, so far we're going to be standing outside on the pound yen, standing outside on the euro yen. I'm holding a position now with a pivot step towards the downside with the dollar yen. The problem is these guys are extremely oversold, so it's going to be very careful on it, meaning I need to make sure that they at least break the important lows in these areas in order for me to go short and validate it. Moving average need to back it up, but zone is still intact and target has not been reached. This guy might continue on a downward move. Australian dollar, I was triggered on a floating order that I had since Friday, so I'm going to hold on that. I had my original stop beneath the zone. You see, once again, the zone's playing the field right there. And I immediately assessed the risk by minimizing from 50 to 20 something, so I just recovered 30 right there on the risks. And one of the two things will happen. I either will get stopped out, or I probably going to get some profit out of the market based on the analysis and projection and predictions that we do on our forecast. The potential outcome is going to be that the market should rise all the way to 78.26, 78.51, and 78.78. Okay. Euro dollar standing outside because it's pretty awkward. I'm not even going to waste my time in there. And pound yen, price action activity suggesting a potential top formation. If we go to the 4-hour chart, we can clearly see that this guy is extremely overbought. Now we wait for price action to validate. Then we come in and calculate synergy zone potential levels for reversal and entries, and potential targets toward the downside. All right, now before I finish today, I just wanted to share with you my view on Apple. Many people say, hey Carlos, can this be applied on any market? This is a daily chart on Apple. Price action is completely sideways, and the reason that I want to use this as an example is because it's a very difficult market to predict. So I'm not saying that we're going to nail it or not. I'm just saying we're going to try our best based on our methodology and how you can apply the synergy zone and the inner circle information in order for you to validate a potential power trade on longer perspective using daily charts and 4-hour charts on a stock. All right, so far here's the daily chart. I noticed that the market is just completely sideways, so basically there's no kind of tendency for me to see other than a double top formation, which most likely is the first inclination for the market to identify here as a potential reversal point, meaning Apple went up, double top formation might potentially means that the market has to recover towards the downside. So now remember, each bar is a day. I'm not going to try to predict the market on a daily basis. It's going to take a long time, so I'm going to try to go as low as 4-hour chart and give you a gauge of what I can expect the market to do. Here's a zoom. Here's a reversal zone on the 4-hour chart on Apple. So basically a pullback of 30.09, no higher than 31.30, might trigger a potential reversal, and that actually almost happened there. And it's still valid. Why it's still valid, Carlos? Because actually the price never actually triggered it or enter on it. It was close enough so I can validate it as a potential, but they never touched it, so it's still valid. And why it's still valid? Because the market came down and did not to the prior low. This is price action analysis now. So one study confirms the potential of the other analysis. Okay. So based on what I'm seeing here, the market was coming into an upward movement. They left behind an important low. this retest of the higher price that they left behind was a failure of the high, the first intention of a potential reversal. And once they break this important low to the downside in this bar, is confirmation that the rejection of the important high is validated. The market tendency might be starting to see a decline. The market pulls back up. We recreated the zone, and it was close enough. It didn't touch it as I like to, but it's close enough. Now I need to validate that the market is indeed more likely in a bearish momentum than in bullish momentum. I'm going to be using that zone for that matter. Now, here's an important fact. I'm starting to see a potential super support levels between 25.33 and 24.94. If I go back in time, I notice how this precisely area where the market actually had a strong support level. And the reason is you are going to be able to calculate those levels in your own. And this is going to work as a gauge of support, meaning I'm not going to buy in that area. Most likely, I'm focusing on a potential sell setup. Okay, that's basically what I'm doing. Focusing only on potential sell setup. The market is extremely oversold on the 4-hour chart, although I don't use this kind of analogy that much on stocks. I use it more on daily chart, and the angle of attack on daily chart of the MACD with the width apart information is telling me that most likely the market is just intended and will try to visit all these important lows one more time. Now remember, this is stocks that we're talking about. So I'm going to measure here. Let me zoom in. I have a potential target of 24.93, 24.27, 23.79, and even further down to 22.47. These are potential outcome forecasts of the Apple stock towards a downside. In order for me to validate either one of these, I need to make sure that the market violates and goes through as low as 24.93 and below of it. Once again, I'm not going to short my positions in there. I'm not going to be trading this. I'm just forecasting for those people holding a position in this equity. And once that happens, they pretty much know what they can expect. Meaning, if you're holding a position in Apple and you see the break below 24.93 being taken, most likely the next level down is going to be 22.47. So you can liquidate your positions and start buying them down when the market settle up again on a buy mode. Now, once again, if we go in a daily chart, take a look how the market is just having a lot of trouble continuing an upward movement. Most importantly, the market just had this high, and the next bar right here, they tested the high and immediately rejected, taking the most important low from it. The market came back up, not even took the prior high. This is a validation of price action reversal and rejection. Now I just need to make sure that they break the 23 and 29, and they're definitely going to go further down, meaning that you can liquidate your position, short sell, and do many other stuff like buying put options, iron condor, selling premium puts, and so on and so forth. So there's a lot of things that you can do with information. All right, so basically we're going to be sitting aside waiting for this to happen, and as usual I can use my good old-fashioned step validation, meaning this support, if they break through it, the next level down is going to be for sure a 25.36, 24.93, 24.25, 23.84, and you notice these are pretty much close to each other because this is strong support before. But if they go through it, then we're talking about a potential decline all the way to 22.44. From where they are right now, expectancy of $3.91 decline on the equity on Apple is high. Let's see what happens, and we'll take it from here through the process of the week. I don't know if it's going to happen or not. I'm using the information of the inner circle to predict market movement with high accuracy, and based on what I've learned, what can I expect on each one of those levels, so I can just adjust my strategy accordingly and make the right decision based on holding my equity or liquidating positions or using any other strategy in my favor. This is Carlos Diaz from Four Side Effects, and I'll see you in tomorrow's forecast.